Ghost kitchens are all the rage, and there are a few players that are really breaking into the market in some very interesting and unique ways. We're going to break it down today right here on the Barron Report. My name is Paul Barron. Welcome back. Nice to see you guys. Of course, we are going to do this whole market mover session. You've probably seen a few of these as we've put them together. Basically, they are an analysis. Just as a disclaimer, these are not financial recommendations. This is my opinion. And it's our analysis of where we think these companies are going because of what's happening in their ghost kitchen. I want to talk about three companies today, and that being, well, let's talk about the big brands first. Denny's, Bloomin Brands, and of course Brinker, all three of which have launched ghost kitchens in their concepts. Denny's, of course, has launched a couple. When you look at the Meltdown, I think the other one is Burger Den, and then Bloomin Brands with their program, which is Tender Shack, and then It's Just Wings right out of Brinker. All of these interesting ghost kitchens are doing pretty good. I mean, in the sense of really kind of understanding where ghost kitchens are going. So what we did here at Foodable is we kind of broke down where was the trend pointing for these brands in the use of ghost kitchens and answer the question, could this drive their revenues and help them recoup some of their losses that they've had? So let's take a look at the first one, and that is Killer Wings, baby. It's Just Wings. This is done by, of course, Brinker. They've kind of rolled this out as, it originally was rolled out as a test. Now it's, of course, within the brand itself, so you'll be able to just jump in and get Killer Wings from them. Depending on the market available, obviously they're using, DoorDash as their partner, I believe, on this one. And this is an interesting concept when you look at where they're going because of the consumer. There's two measurements that we wanted to look at. The first measurement was consumer sentiment, just on the brand in general, but more not on Brinker and not on their other brands, but on specifically the Killer or It's Just Wings concept. Theirs is a little bit different here in terms of the sentiment and the referrals. So we did this back to Q2. A lot of these are very young brands that are being developed. And we started to look at their sentiment continuing to climb. So that's a good sign when you see a brand that sees this kind of growth. And especially in the 70 to 75 range, it's still like a B or a B plus when you look at sentiment. But their referral numbers were starting to rise and then had a little bit of a sharp decline in Q1. Now, this is not quite the end of Q1, but it does have some of it inclining in the sense of it's slowing or slowing in terms of referral. So this will be interesting to watch this brand and whether or not they can really kind of break into it. I want to look at their fundamentals also, because this is something that when you look at Brinker and where they're trading as of today, late March, this is around 70 bucks a share. You can kind of see their 6-month trend right here. Not a bad look from a brand, but where I kind of drew some attention to this, and of course everybody's revenue numbers are down, they being down 4.33%, net income down 84%, net profit margin down 83, almost 84%. The interesting thing is their cash on hand is up 227%. So they definitely are banking a little bit of cash, probably through some of the stimulus applications and some of the EIDL programs, or even the PPP that could be assisting, Brinker in being able to keep these kind of cash reserves, which is a good thing in the sense of how is this going to play out for them and really kind of roll into the next, area. If you look at Brinker, when you see the sentiment numbers are still showing good growth. The referral, not quite as good, but this could also be just a small dip in referral for a variety of reasons. You can have a service issue because, it's a brand new concept. People are learning how to use it. Those kind of things could come up and could easily be fixed and could really continue to track with their consumer sentiment. So this one, it has some opportunity. I'm going to give you my recommendation, or at least what I'm looking at when I look at the restaurant brands that I invest in, and later in the show. So make sure and stick around for that. The other one that I want to break down is, of course, Bloomin Brands concept, and this one is the Tender Shack product. And this one is kind of interesting because one, the product itself is absolutely off the charts in terms of how consumers are saying this is a great product. This was just a quote from one of the local news outlets that had basically covered the concept dropping into their city. I like what they're doing, but can they keep it going? Kind of that's the framework when you see brands like this start to break out or start to really trend up. The key is can they start to sustain, build that customer, bring back referral, all that kind of. So this next slide is going to show you something, and that is, the answer is yes. If they stay on this track, their referral is actually outpacing, and they're the only brand that did this in all of the ones that we analyzed. We looked at about 15 different brands, all of which had ghost kitchen presences, and all of which were really, at least on the uptick. These were the 3 companies that we really looked at to really kind of break down today, mainly because of their sentiment and their referral ratios, which were fairly high. But in this particular case, their consumer referral ratio here is actually greater than their sentiment ratio at 86.32. So this brand is, first of all, they're the #1 out of the 3 that we've looked at. They're the highest ranking in terms of sentiment and customer referral. So that in itself shows you that the product has a real good value, at least to the customers that are doing them. Now, when you look at their fundamentals, let's break them down a little bit. They're trading at around 28 bucks a share. Nice little growth here over the last 6 months. You know, when you see the growth of where they came from, obviously this, you know, what you're seeing is this doesn't show you the COVID dip, but it does show a little bit of a rebound here. If you start to look at their financial performance, net income down significantly at 221%. That's the one that probably hurts me the most, 158 million down in that. And then if you look at their cash reserve, quite a bit softer versus what you see over on some of the other brands. At 63.79% in terms of cash reserve and cash on hand. Not a bad position, definitely not one that I would be concerned with if I was looking at this brand as an investment. The key here, I think, is how does this brand sustain this, and can this new, you know, chicken tender concept really spin up and become something long-term for them? Maybe. Could this become a brick and mortar that they spin off? This will be questions. If they were to do something like that due to success, you know, this is another brand that could really jump in there. They already have Carrabba's, Outback, Fleming's, and Bonefish, all of which are more on the casual dining side. So this one being more, I feel like it's more of a fast casual concept, so it definitely kind of flows into that area. But we'll see how this one rolls out. I think there are some good benefits here. I do like what I'm seeing in terms of their sentiment and their referral numbers, which is really solid. And I like the product, because that's the other key element that you have to deal with in a ghost kitchen is, can you actually put a product out, one, that kind of can hold its own, but also can really compete, because the ghost kitchen competition is heating up in a big way, and you've got to have a product that really brings it home. And I think they've got one with the Tender Shack. So let's kind of keep an eye on the boys over at Bloomin Brand. My last one, why this might work, is Denny's. And they have 2 concepts, one, the Burger Den, and the other one, Time to Meltdown or Meltdown. The Meltdown concept is kind of the sleeper here. It's interesting, too, if you look at where this, and this was just a note from their CEO, but many casual chains have created brands based on chicken and or wings. Denny's has taken a different approach, focusing on popular menu items. The Meltdown is showing signs of growth. Also, the Burger Den, obviously, and Meltdown could grow market share and recover some of its lost sales. This is an interesting thing because of their strategy, because they are going after more of the centralized menu that they currently offer. When you look at, you can get a burger at Denny's, you can get this melt at Denny's, but they're really focusing in on this. So I think it's an easier transition for them to really roll this out across the market for them. And if you look at some of their fundamentals, let's look at their the quarterly report. This is the one that just came in. And you can kind of see the recovery as it's happening from Q1 to 2 last year. Obviously, Q1 was, they were still down in sales, but it wasn't obviously until Q2 when, of course, the COVID hit. Q3, they started to rebound, and then in Q4, another slight positive rebound. I think we're going to see some good numbers in Q1. I don't necessarily think they are going to outpace where they were previous, but they might even outperform Q1 last year. So that would be interesting to see if they could do that. The fact that they've been able to kind of move into this is a pretty solid, I think a pretty solid system for Denny's in the sense that they have been able to recover a little bit. And they're also in a position now that they are offering some additional brands, which has been a very unique opportunity when you think about what they're doing over there, because this is not something that the brand has even remotely done in the past. So it's definitely an interesting, because Denny's doesn't have any other brands. So other than some of their concept flagships that they've tried to do over the years. The other thing I want to break down is their open dining rooms, closed dining rooms, and temporary closures. If you look at the data on this, which is interesting that they did this, where they broke it out by open dining room performance and closed dining room performance, because I think, one, being fully transparent as a public company, this is a really good analysis. I like that, to see the kind of the breakdown in Q4. You can kind of see October, November, December in open dining rooms, and then also in closed dining rooms, again, October, November, December. Interesting data on this, because I think that's a scenario that kind of lends back to the whole point of needing ghost kitchens. And then you go look at their capacity on their units. So that 57% of domestic system sales is based on their 75% capacity, the 50% capacity, and then the 25% capacity stores. And they break them out there individually. And then the off-premise only, 39%. This is where I think this is an important number. I probably should have circled that in red. The 39% off-premise sales improvement for them is dramatic, because Denny's did not have a off-premise marketplace before. Now they're basically rolling out 2 brands that potentially could roll out and really be effective in terms of off-prem. So this is, I think, a great opportunity for the guys at Denny's. It'll be interesting to watch. Let's look at their consumer and their sentiment and their referral numbers. Also very solid. They're pacing very highly here. And again, sentiment and the consumer referral is in line. These are the kind of things that I look for when I see a brand that's on fire. If you have one that the sentiment is great, but the referral is not great, it usually means it's a one and done. That's somebody coming in, they're ordering the first time, and they don't come back, and they don't refer. If you can track, get them in, and keep that referral rating at a high rate as long as your sentiment is climbing, then you've definitely got something, and it's a winning potential concept. So this is done on the meltdown. We did not break down the Burger Den. I'll try to do that maybe in a future video to where we can kind of really drill in on Denny's. But I think this is a brand that we need to watch. Their fundamentals, when you look at where they are over the last 6 months, you can kind of see they've had a recovery. We obviously right now at the time of filming this, we've seen a correction here in the last day. Everybody's diving a little bit, but they did have a correction. And if you look, if I'm concerned with anything, it is the red circles you see right there, which is their net profit margin down 108%. But the biggest one that concerns me is their 15% cash reserves or cash on hand. This is the thing that bothers me the most with Denny's if I was trying to look at this. But on the other hand, I look at the upside of where they could go with this off-premise and with these 2 very unique ghost kitchens that they've been able to build. Denny's could get something here, and it may end up being something that's even bigger than the Denny's brand itself, if you can imagine that. One, it opens up the day parts, so it really creates some very unique elements there. It creates whole new marketplaces in terms of off-prem and potentially new customer bases that typically would not go in and dine into Denny's. And you're doing it with products you're already selling on your menu. So that is a very powerful move. And I think that with Denny's and just their ability to succeed on this, which they've been able to do, this one is going to be fun to watch, I think, for sure. The reason I'm bullish on ghost kitchens in general, if you look at the forward indicators here, and this is kind of the thing, I show this slide a lot on some of the videos, but it really kind of reinforces where the market is going. And the big one is the 221 million restaurant consumers. This is a population that are using the food ecosystem in restaurants. Total food occasions this year or per year at 241 billion. By 2023, we're going to see about 58% food away from restaurant. Now, Denny's you saw back there in the high 30s. in terms of their off-premise, so they're tracking very well by 2023. They could hit this number and be on that national average. The other thing we're going to see is a continued growth in the industry itself. So we're gonna see from where we were pre-COVID, which was around $1 trillion in overall revenue for the industry, and that was in 2019. In 2021, 2021 will be a recovery year. 22 and 23, we're going to be watching very closely. But I think by the end of 23, early 24, we're going to be on track for a $1.3 trillion year. All of that being said, ghost kitchens are going to be a big part of this. These are 3 brands, I think, when you look at publicly traded brands that are doing things right to help offset and also recover some of those lost sales. This is one of the strategies that's being used. I think it's being used effectively by all of them. The question is, why do I like them? Let's talk about that. One, Brinker has the cash to sustain a long-term recovery and some nice sentiment. So they can hold on and they can pace this thing out. So if we get another little blip or something happens, Brinker's in a really good position here. Denny's is showing real action with consumers, but they need to turn quickly into revenue because they have a short runway. So their runway is what I'm concerned about most, but at the same time, these are 2 good concepts that could really help them bring back the Denny's brand. And I shouldn't say bring back, they've never left, but really help them recover and get some of that revenue back. Bloomin', the Tender Shack concept I like because it's the highest sentiment and customer referral out there, and it does have something special, something so much that I think with Bloomin Brands, this could kind of move them into another area for another brand that comes out of this. I think they found and uncovered a gem here, and it'll be interesting to see what they do with it. So, in my opinion, no financial, advice here, of course. But what I would do if I'm looking at these, and I do look at these, and I do invest in these companies, I would hold on Brinker, I'd buy Bloomin Brands, and I'd buy Denny's today, currently with where they are. As long as we continue to see the recovery, I think all these brands really are going to show some nice gains. Brinker, a little bit more concerned about the fact that they've got a little bit of a wobbly sentiment and referral number, even though they're in a good cash position. My question, I think, with Brinker, are they really going to be in this long term? I think Denny's is going to be in this long term, and I think with Tender Shack, the guys over at Bloomin' they may end up spinning this baby out. So there's a lot of opportunities here, a lot of things that I think you guys are going to continue to do your research on. If you'd like to for us to do a market mover, maybe on some other concepts. I mean, we've had questions on Shake Shack and many others, even Chipotle, which we've done a market mover on Chipotle before, giving them a really high price range. So you should check out that video. Make sure and just search Chipotle's stock price, because I think we're going to be in the top rankings there. But if you'd like to maybe get a market mover for us to analyze, send us some notes or comment below. Or if you're on the podcast, make sure and just leave a note. That's another way we get great feedback from you guys. Or if you have an idea for a market mover or someone you'd like to see on the show as an interview, just send us a note to producer@foodabletv.com. You can also hit me up on Twitter @Paul Barron. We'll catch you next time right here on the Barron Report.